There's a massive change on the horizon in the world of accounting. It's called IFRS 18, and it's set to completely change how we look at a company's performance. The whole idea is to bring a new level of clarity to financial reports. So, what's all the fuss about? Let's get into it. You know that feeling, right? You look at two companies, they're in the exact same industry, but their income statements look totally different. If you've ever felt that frustration, you're not alone. And that confusion is precisely what this new standard is here to fix.
So, how do we get here? Well, the whole journey to IFRS 18 started with a pretty simple question. Are financial statements actually as useful as they could be? For years, investors and analysts have been saying, hey, the old rules, they're just not cutting it.
Under the old standard IS1, companies had, well, let's just say they had a lot of flexibility. The rules were vague. This meant they could group income and expenses in ways that, frankly, could make their numbers look better, and maybe hide some not-so-great recurring costs. This created a huge lack of comparability and, let's be honest, it really chipped away at trust. The goal with IFRS 18 is to swap all that chaos for clarity, consistency, and confidence. And this right here really gets to the heart of the problem. You'd see companies talk about their underlying profit or core earnings, but what did that even mean? These terms had no official definition. It was totally up to management to decide what went in and what stayed out, which made it almost impossible for anyone on the outside to know what they were truly looking at. Okay, so we've got this global problem of inconsistent reporting. What's the fix? Well, the International Accounting Standards Board, the IASB, came up with a global solution, IFRS 18. And it's important to note, this isn't about changing what numbers get reported, but all about how they're presented. Now, a change this big doesn't just happen overnight. The road to IFRS 18 has been a long one. The whole project actually kicked off way back in 2014, and a lot of that was in response to calls for more transparency after the 2008 financial crisis. After a ton of global feedback on a discussion paper in 2019, the final standard was issued in 2024, and it's all set to become mandatory for everyone in 2027. So, what's the single biggest change we're going to see? Honestly, the best way to think about it is like finally organizing a super messy closet. IFRS 18 brings in a new mandatory structure for the profit and loss statement, where everything finally has a specific place to go. Every single line item of income and expense now must be sorted into one of these 5 categories. You'll recognize some of these from the cash flow statement. We've got operating, investing, and financing. And then we add 2 more for income taxes and discontinued operations. No more creative accounting, no more guesswork. And just look at the difference this makes. On the left, you've got the old way under IAS 1. It could be a real jumble of different items. But on the right, you see the clean, new IFRS 18 structure. See those new mandatory subtotals like operating profit? Those are a huge deal. They give us clear, consistent stopping points for analysis, which means we can finally make true apples-to-apples comparisons. Let's zero in on that first mandatory subtotal, operating profit. This is an absolute cornerstone of the new standard. This number tells you exactly how the company's core business is doing, without any of the noise from its investing or financing choices. It's a pure, comparable measure of a company's operational health. But the changes don't stop with the P&L structure. Oh no. IFRS 18 also takes aim at those custom, management-defined metrics we talked about earlier. It's bringing a whole new level of transparency to the entire financial report. So, IFRS 18 gives these custom metrics an official name: Management-Defined Performance Measures, or MPMs for short. Think of things like adjusted EBITDA or underlying profit. Companies can actually still use them, but, and it's a big but, they have to follow some very strict new rules. And here's the rule that really changes the game. No more black boxes. If a company wants to show you a custom number, they have to explain everything right there in a single note. They have to tell you why it's useful, show you the math, and, this is the most important part, they have to show you exactly how their custom number connects back to an official IFRS number. It builds a bridge from their view to the standard view. This drive for consistency extends to the statement of cash flows, too. The standard basically just eliminates choice. Before, a company could decide to classify interest paid as either operating or financing. Not anymore. Under IFRS 18, interest and dividends paid are always financing. Interest and dividends received are always investing.
It's a simple change, but it dramatically boosts comparability across the board. So, when you add it all up, it's pretty clear that IFRS 18 is a genuine game changer. It represents a huge step toward a future for global accounting that is way more understandable and trustworthy. So, when does this all kick in? Go ahead and mark your calendars. The new standard becomes mandatory for any annual periods that start on or after January 1st, 2027. Now, that might sound like it's a ways off, but believe me, companies and investors are already getting ready for this new world. So, who really wins here? Well, it's pretty much a win-win-win. For investors, it means less time playing detective and more time doing actual analysis, which should lead to better decisions. For companies, they get a much clearer way to talk about their performance and maybe even improve their own internal analysis. And for the market as a whole, it just means more trust and more efficiency. Everybody benefits. At the end of the day, IFRS 18 isn't just another accounting rule. It's a whole new philosophy based on clarity and comparability. It's promising a future where we can all have a much clearer, more honest conversation about what really drives a company's success. The only question left is, are you ready for it?